If money represents value, why does the world keep getting poorer while the numbers keep getting bigger? Every country tells the same story. We're in debt, but it's manageable. We owe money, but growth will fix it. This is just how modern economies work. Yet somehow, no nation ever truly escapes debt. Not after wars, not after booms, not after technological revolutions. And here's the strangest part. Global debt doesn't shrink when crises end. It expands. So who is this system really serving? Tonight's story is not about reckless spending or lazy governments. It's about how debt quietly replaced money, how it became a tool of influence rather than exchange, and how control shifted without tanks, invasions, or public votes. This is the story of how global debt turned money into a weapon of silent control. For most of human history, money was simple. It was heavy, it was limited, and it couldn't be created by decree. Gold, silver, salt, grain. Money was constrained by nature. If a king wanted more money, he had to conquer land, tax harder, or mine more metal. All of these had limits, and limits mattered. Debt existed, but it was personal, localized, and dangerous for rulers. Too much debt meant rebellion, collapse, or invasion. Then something changed. Not overnight, not dramatically, but permanently. The shift didn't begin with greed. It began with convenience. The modern story starts in medieval Europe. Goldsmiths stored valuables for merchants. Over time, they noticed something important. Most people never came back for their gold. So goldsmiths began lending receipts instead of metal. Paper promises circulated as money. This was the first quiet transformation. Money stopped being a thing and became a claim. Then came the critical realization. Not all depositors would demand their gold at once. So goldsmiths lent out more claims than gold they possessed. Fractional reserve banking was born. At first, this was private and risky, but governments noticed something extraordinary. This system could fund wars. Without raising taxes immediately, debt became political oxygen. By the 17th and 18th centuries, national debt transformed warfare and power. Britain didn't dominate because it was richest in gold. It dominated because it could borrow endlessly. The creation of central banks formalized the system. Governments issued bonds, banks created money to buy them. Interest locked states into permanent repayment. Debt was no longer a temporary tool, it became structural. The key shift happened when money creation moved from the public realm to private banking systems backed by the state. This arrangement created a paradox. Governments issued currency but didn't fully control its creation. Money entered the economy as debt, not as wealth, and debt came with interest. Here's the mechanical flaw few people explain clearly. When money is created as debt, the principal is created, the interest is not. To repay all debt, more money must be borrowed, which creates more debt, which requires more repayment. This is not a conspiracy theory, it's basic arithmetic. Debt must grow or the system collapses. So stability depends on constant economic expansion, constant borrowing, constant inflation, and when growth slows, crisis. Two moments changed everything. 1913, central banking consolidated. The modern central banking era standardized monetary control. Interest rates, money supply, and government financing became centrally managed. Debt became normalized, permanent, expected. 1971, the final anchor breaks when the gold standard ended. Money lost its last physical restraint. Currencies became pure belief systems. From that moment on, money could be created infinitely. Debt could expand without limit. Crises became policy tools. Debt was no longer tied to reality. It was tied to confidence. Look at the pattern. 1929, 1970s, stagflation, 1987 crash, 1997 Asian crisis. 2008 financial collapse, pandemic era, debt explosion. Each crisis followed the same script. 1. Excess debt builds quietly. 2. Shock exposes fragility. 3. Central banks intervene. 4. Debt increases further, losses are socialized. Assets are consolidated. Debt didn't weaken power. It concentrated it. Debt doesn't need soldiers. It changes incentives. Governments in debt must cut social spending, privatize assets, Align policies with creditors, individuals in debt, accept worse wages, delay families, avoid risk, fear, instability, debt disciplines, behavior, not through violence, through dependency, and the deeper the debt, the narrower the choices. Every solution targets symptoms: lower interest rates, quantitative easing, debt restructuring, austerity stimulus pack, but none address the core issue. Money is still created as debt, so every fix stabilizes short-term increases, long-term fragility. The system survives by postponing collapse. Today, global debt exceeds global GDP, sovereign debt grows faster than productivity. Financial markets react more to central banks than real economies. Money no longer measures value, it measures leverage, and digital systems are accelerating this shift. Cashless economies, algorithmic credit scoring, central bank digital currencies. Control doesn't need coercion when compliance is automatic. Despite record wealth, housing becomes unaffordable, wages stagnate, work hours increase. Why? Because debt extracts future labor. You're not paying for the past. You're working for interest. 3 key takeaways. 1. Debt is structural, not accidental. This system wasn't hijacked, it evolved logically. 2. Control comes from dependence, not ownership. You don't need to own everything, just the claims. 3. Crises are stabilizers, not exceptions. They reset trust while expanding control. A system built on infinite debt requires infinite obedience. The question is not whether it will change. The question is, will change come through awareness or collapse? If this story changed how you see money, debt, or power, like the video, subscribe for deeper financial history, and share this with someone who still thinks debt is just bad budgeting. Because the most powerful systems don't announce themselves, they normalize themselves.